Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, February 6, 2018. Wanted to do an overview of the global equity markets. I have a watch list of ETFs that track the various stock markets around the world, and we'll start out here with the S&P 500 and then drill through there. So this is really the best proxy for the U.S. market is the S&P 500. It's nearly, roughly 500 stocks, the largest companies in the U.S., and it's well diversified among different sectors, unlike the NASDAQ 100, which lacks certain sectors such as financials, which are a key component of the U.S. economy. And the NASDAQ 100 is really what I call it a tech fund with an Amazon kicker, jokingly, because it's very tech heavy. So we'll get to that. Before we do, I just wanted to make a few points. I made a comment under yesterday's video. I added some comments, and I just wanted to bring this up. Despite all the doom and gloom on TV right now, I'm sure if you're watching the news or watched it last night and the last couple of days, reading the papers, you hear all this talk. The Dow, biggest point drop in history. I addressed that today. That's ridiculous. They ought to talk in percentage terms because the higher the Dow goes, the less significant a 1,000 point drop is. I made mention this morning, if the Dow's at 10,000 and it goes up or down 1,000 points, that's a 10% move. If the Dow's at 30,000, which it almost is, that's much less. So therefore, don't get tied up in headlines like that. In fact, technically speaking, we haven't even had a stock market correction yet. A lot of you might laugh and say, "What are you talking about? We just had one of the sharpest corrections in years." Now, this may be, semantics here, but the definition, the widely or the most commonly accepted definition of a correction is a drop of 10% or more. The S&P has not even fallen 10% from the highs. Came close. I'll give it that. It still could have another jog down. I think we're, quarter point or so shy of that. But even so, a 10% drop, 10% is a minimum threshold for a correction. So we've just had a pullback here in the markets, and sure, it was sharp, um, but all the long-term trend indicators remain clearly bullish. And what I wanted to speak on is fundamentally. Nothing has changed fundamentally since this New Year's rally kicked off. A few weeks ago, all I heard is that investors, there was a panic buying in the market for those that were left out because they had heard they hit a flashpoint. Nothing had changed. The global economy has been booming for a while now, growing steadily. Earnings had been good, so we had a good earnings season overall. The majority of companies beating expectations. We had all the economic data in the U.S. is strong, so nothing has changed fundamentally to justify this. This was simply, as I stated before, a combination of several factors. Most importantly, a one-sided trade. When everybody's long and nobody's short, what happens is you have nothing but sellers at that point. So when you have a break, when if was it a week, just over a week ago, we finally got those sell signals on the market that I was looking for. So I can tell you with the utmost degree of confidence that the catalyst for this sell-off was a break of those support levels. All the major indices broke at the same time. From there, the selling was impulsive. Now, the reason it dropped so much is because it was like, a powder keg. Again, when you have such a strong one-sided rally, technicals are defied, the shorts give up. You blow out short interest, you take it down to multi-year, historical low levels. Bullishness is at historical high levels. Not literally, but metaphorically speaking, everybody's long, nobody's short. What happens there, you have all the market participants that are in the market at that time are sellers. They're potential sellers. They're not buyers because they're already in. They're already all into the market. And when you blow out all the shorts, what happens is there you don't have those short sellers there to cover its support levels. In fact, they're all on the sidelines. They see the support levels break and they dive in, just like I did and a lot of you guys on the site when you see those. So therefore, when you have a very low level of shorts in the market, very low, put to call ratio, everything like that, you don't have the protection. And of course, we had the volatility short trade unwind as well, and that undoubtedly had played into things there because the institutions who had been shorting volatility forever and a day because it's what was working, well, they all had to scramble to protect, the other side of their positions and trades there. So, anyways, it's over, or I'd like to say it's over. I can't say that. And the one thing I will tell you, I've learned over the years, anything is possible in the markets. However, with that being said, I've just made the case. Fundamentally, nothing has changed. All the economic data is strong. Global growth is strong. I will say, and I'll tell you this, most market participants out there think we're in the eighth or ninth inning. I'm convinced we're in the ninth inning of this bull market. So I see very little upside, but I think there's a trade to be made here off these trend lines. And if they break, like I said, all that matters when looking at the weekly charts is a weekly close below support. So far, we pierced it intra-week, and I had made mention recently that I not only wouldn't be surprised, but I would expect an overshoot, a momentum fueled overshoot of all most key support levels. That's what's happened so far on the daily and the weekly time frame. We overshot, but let's see what happens by the end of day Friday, and even a slight close below. Sometimes you can have one weekly close. Um, we can shoot back up the following week. But as of now, let's just dive into the charts here and get going on this. Here's the S&P 500. This was our primary uptrend line off the March 2009 lows, very well defined. It broke down. We had during this time we had about almost 2 years of sideways consolidation. The markets consolidated and they broke out, and that was this advance. Broke out and back tested back here in late August, or I'm sorry, late October of 2016, and we've had a nice rally since. I also often say that the initial tag of a support level, if it hasn't been tagged in a while, I mean, not the first tag, would be technically your initial tag, but the first tag in a while very often produces a reaction. So I'm looking for a bounce trade here. I think it's a swing trading op that can last a few weeks to maybe a few months. And as you guys know, if you watch my recent videos, I have a scenario. That doesn't mean it has to happen. The market doesn't always give us what we want, but I would love to see a new high, marginal new high, take out the top of the New Year's rally, uh, take out all this selling that we had recently. Bullishness would go through the roof, and that would set the stage for a much deeper correction, and most likely, ultimately, and I expect it to happen sometime this year. Could happen few weeks, few months from now, probably more like a few months, a break of this primary uptrend line, and then we're looking at bear market numbers like 20% or more drop off the highs if and when that happens. But again, that's one of many possibilities. All I can do is take it day by day, and we'll watch the charts and see how they develop. But as of now, I'm looking for more upside here, even if we test this trend line for a couple weeks or so. That's a key trend line on the S&P 500. Here it is on the daily chart, and I know these charts are boxy because I tried to fit them both together. They're not as much in landscape mode as I usually like to see. It's more of a portrait mode here, but the S&P 500, I showed you this already here. Here's that trend line. We have a similar trend line on QQQ, and you can see what happened. This trend line goes back a couple years. There was our intraday spike today down through it, and look at this candle. Look at that huge green reversal candle. That's what I expected. That's what I like to see, and that helps to confirm the case. Another thing that stands out to me is the fact we went from extremely overbought. In fact, this is the most overbought we've been in decades, if not history, all the way down to oversold. Okay, folks, sorry for the interruption. I had to pause the video, take care of something, and I was on the SPY, I believe, showing you the recovery. Here's that same comparable trend line you can see goes back way on QQQ. Remember, daily charts here on the left, weekly chart on the right. There's that intraday pierce and a big green candle. So, congrats so far to those of you who went long, and I do think there's more to come. And here's QQQ on the weekly time frame. You can see this trend line comes all the way off 2015 lows, very well defined, and we just kissed it. A perfect kiss of that trend line. A lot of reactions on there. The point I'm trying to make is, other than the short-term charts, when that's already played out, there's no technical damage on the charts, the daily or the weekly charts. In fact, we had these whipsaw signals. I imagine there's some traders that waited for a break of that trend line to short, and now they're forced to cover. So either way, the near-term outlook, as long as these lines hold, particularly these weekly trend lines, longer term trend indicators are bullish. So I think we could be looking at a rally here to last at least a few weeks, maybe even a few months or more. Okay, now we'll run through the other global markets in no particular order. I just have a watch list down below off the screen. I'm clicking here. Remember, all these will be the weekly charts, 10 years. I may zoom in and out, so it may not be 10 years. You can see the years, each calendar year down here on the bottom, as you can see the dates down here on the daily chart. So here's EWT, that's Taiwan. You can see a trend line. If you look at the daily chart here, here's an uptrend line. It may even come off to the left of the screen. Let's see. Yeah, it starts around early 2016. You can see pretty well defined. And what you notice here, what stands out to me is a breakdown of that trend line. Hits support. You can see a support line there, bounce to back test so far. So, overall that's bearish price action because we've broken trend there. However, most importantly, again, you have to define your trading style. Swing traders really live in the world of the 60-minute and daily charts. Trend traders, long-term investors, your 401k money, that kind of stuff, look at these longer-term charts. And so far, this line can be drawn different ways, but you can draw it like this and say that we're still above trend. Trend lines are subjective. I will give it that. This is comparable to the trend line I have over here, which shows a breakdown and a back test so far. Let's move on to the next one. EWC, this is Canada. This is a long-term trend line that goes back quite a way. I'd have to go back longer in time. There you can see we're still below that trend line. I wouldn't be surprised if we made it up to that in the coming weeks to months, so maybe a little more upside there based on that weekly chart. Daily chart here, this is a trend line I'm watching, and so far, similar to the US markets, it was pretty well defined, goes back to early 2016, and we breached it intraday, snapped back above it. Each of these lines here are levels. This looks like an ascending broadening wedge pattern, by the way. So I want to try to put this in perspective. For most of these markets, including the US, near-term bullish, longer-term bearish, intermediate. No, it depends what definition of intermediate you use. I'm looking. It might take a couple weeks up to get back up here, but if you look at this line and this line, which make up an ascending broadening wedge pattern, it could take a few weeks to get there, and that might provide a short entry on a back test and then a move down. If we get back above this trend line, it's not super well defined. You can see a pretty nice horizontal resistance level there around the 2960-ish level. Maybe we go up there, but again, we have to take put it my main emphasis is on the U.S. market, not only because I live in the U.S. and trade those markets mostly, but they tend to lead the rest of the world. If the U.S. has a big day, obviously our problems here carried out overseas, and a lot of the other international markets melted down. So it's not unusual during the big sell-offs as well as the big rips for the rest of the other developed markets to follow the U.S. But there's Canada, and let's continue on. EWM, Malaysia. Not. Oh, actually, this one probably. I'll tell you. I went through the charts right before the video. Of all of them, this is the most bullish that I see out there. This one has already had a heck of a correction off the highs, and back in 2013, it's had a bear market, took it down almost 60%, put in a divergent low, very strong bullish divergence here on the weekly chart, right around the beginning of the year, and has rallied up to this $36 level. You can see a previous reaction there, a reaction from above. So if this one breaks 36, my targets are 40, 47, 65. So again, one of my favorites as far as non-US markets. EWY, South Korea. There's a trend line. Let's see what stands out. Well, let's just look at the daily chart here. Here's a trend line right here we can look at. Not super well defined. This one's pretty thinly traded, but we had a divergent high. You can see the negative divergence and fell down. Intraday break of that trend line and snap back above it like everything else so far. So they're gaining trends. So far, these have been whipsaw sell signals, and that's bullish, especially if we can follow through to the upside. There's a gap to be backfilled there. There's support there around 71, 76. Remember, these are going to be choppy. Most of these overseas markets, especially when you get on the other side of the world, the Asian markets, they're trading, when we're close. So you're going to have a lot of gaps on those. When you trade the ETFs that trade on the U.S. exchanges because of our difference in trading hours. EWZ, Brazil, divergent high right there, negative divergence, divergence on the weekly chart. Here's some levels. I'm not going to spend a lot of time on some of these. There's Mexico, had a divergent low on the weekly chart, divergent low on the daily chart here, nice rally. There's some resistance there, and I should add another line right about here. Let me get rid of this to give us a little more space on the chart. Next up, EWI. Here's Italy. Not a lot standing out to me on the weekly chart. Could probably draw a trend line right here, which we're challenging now. We tried to take it out and fail. Here's EWI. There's a trend line. So what it looks like we had here, of course I have a lot of different lines, but here's your primary uptrend line right here on the daily chart. So we had a breakdown, a back test, and then it moved lower. I don't have a strong opinion, but I always say this. If you are, a member of the site and you live or trade one of these countries, and I'm glad to give an opinion, just drop me a line in the trading room and I will be more than glad to put up a chart with price targets and my thoughts on those. Let's see, next up, EWG is Germany. Here's a trend line. Let's look at the weekly chart first. You can see an uptrend line which was broken and not yet recovered. So this one's in a little bit of a precarious technical position. Does have pretty decent support around 31.87, but so far it's trying to hammer back up, but it's still below that trend line. Fairly well-defined trend line there. On the daily chart over here on our right, support around 31.87 and divergent high. Like I said, a lot of divergent highs here on both weekly and daily time frames. So, at this point in time, I'm looking for a bounce and then to get back short for the next swing down. And again, hard to say right now, but I'm assuming that bounce may last for at least a few weeks here. EWQ, this is France. Here's a weekly chart, pretty well defined uptrend line so far. And it's working its way up in this wedge type pattern, negative divergence on the weekly time frame, but so far it fell. France had been doing well lately, hammered off support so far. So that one held support, has not broken trend line support. When we look at the daily chart here, here's a uptrend line, minor uptrend line. It pierced intraday but shot back above. So that seems to be the common theme so far, guys. A lot of breakdowns that it looks like today's, the recent selling may have ended with today's lows with a few of these breakdowns that snap back on the daily time frame. And remember, let's see what happens by the end of the week. We still have 2 trading days left after this. There's about 10 minutes to the close, so I want to wrap this up before then. EWJ, here's Japan, well above trend, although it's taken some pretty heavy selling recently. There's some trend lines to watch. Let's just keep an eye on that weekly trend line there on Japan. Sweden had looks like almost a double, nearly a triple top high here, around 37ish. Trend line break, back test, and it's moving lower. Divergent high over here on the daily chart. But you can see this is a support zone. Let me highlight that for you if you're trading this one. Let's see, right around here, we need to watch that support zone. Use a different tool here. Might show it a little better. There we go. Support zone there. This one trades well to the technicals. You can see all these steep uptrend lines. They break, you get a correction. Another sharp uptrend defined by a trend line break, correction. And next up, Spain, divergent high, negative divergence right here. That doesn't look so good. Starting to come off. We had divergent high here on the daily as well. It looks like a rising wedge pattern, so we need to watch this trend line. There's also some pretty decent horizontal support right here. And if that goes, there's a big gap there, a thin zone support down there around 31 or so. Next up, EWU. This is the UK. Looks like this one broke. Here's a key uptrend line on the weekly chart. Broke it intra-week, but so far we've moved back above it. Daily chart, it's broke down, but it's just below. So this one actually is below. It's on breakdown mode, below trendline support as well as price support here, or former support around 35, 38. You can see a line right there. Needs to get back above that level to look good. So, we're not out of the woods yet. Like I said, some of these markets have recovered some key levels today, others haven't. Belgium, I don't have a lot here. Nothing on the weekly chart marked up. Divergent high on the daily chart. Very overbought. But again, I don't have a strong opinion on that chart. EWO, Austria, And this one looks like a pretty well-defined trend line here on the daily chart. You can make that out. And so far, it's bounced off trend line support, and it also has pretty decent horizontal support here, a zone that comes in around 24.17 to 23.46. You can see on the weekly chart here, it's still above trend. This is the primary uptrend line. So as of now, okay, but again, it's these divergent highs that warn of an impending trend change. I think sooner or later, uh, most likely sometime this year, possibly in the first quarter, second quarter, these trend lines will probably give way. That's what the divergences indicate. Here's Hong Kong EWH, broke out here, took out that previous reaction high, started to rally, had negative divergence, and it's come back in. It's back tested. So that was an objective long there, right at that when it back tested that previous reaction high around 24.69. Looks to be here on the daily chart, forming an ascending broadening wedge pattern. That's this line here with this line, and right now it bounced off the bottom of that ascending broadening wedge pattern. So watch for a break and a daily close below there. If so, my first target would be down here around 23 on EWH. EWN, the Netherlands. This one's above trend, but again, it looks like a big, steep, very steep bearish rising wedge. We haven't yet really closed the week, and we're just right about on that trend line now, but you can see the negative divergences. So I don't see, like I said, I don't see a lot more upside in a lot of these. Maybe a bounce. Um, we'll just have to respect whatever happens. So we'll keep an eye on these daily and weekly charts. You can see some of the levels there on that one. EWS or Singapore, another one that's just holding on to trend, hit slice below the trend line intra-week. Looks like right now it's back right on trend. Here's a couple trend lines on the daily chart to watch. Again, I'm not going to expand on a lot of these, but if you have any questions, just drop me a line and I'll give you some additional thoughts on it. EWA Australia looks like Saved by the Bell again here so far today. If we close, well, we'll close right back on it on the weekly, but the week's not over yet. Remember, we still have 2 trading days left after today. There's your daily chart there, but again, it looks like a big rising wedge. You can't see it there, but there's negative divergence as well. So I think the upside is limited, but on a weekly chart, that could play out for weeks or months. Another thrust up within that wedge could break in the second, third quarter, fourth quarter of the year. Who knows? Yeah, yes, this is Israel. This one's just been a chop and grind. Here's a 10-year weekly chart, and for years now, it's been in this trading range between about 55.36 down to about 45.80. You can see the sideways range right here, and you can see what it looks like on the daily chart. You get these rising wedges, negative divergence. I don't have it drawn out here, but you can see there's negative divergence. Boom, breakdown, sharp sell-off, rally, another sharp uptrend, breakdown. So that's maybe a good trading vehicle, but it's just slopped around sideways for years now. And I think we have one left, and that's it. Yep. EWL, that's Switzerland. Looks like on the weekly, you can see these trend lines. You get the breaks. These are major trend changes. So this is our uptrend line to watch now. We're just below trend as well as horizontal support around 35.53. So this EWL needs to close a week back up above there. Otherwise, it could be in trouble. But there's some support, a little downside left on the daily chart. Here's a trend line to watch on that one. Break below there would, of course, put us down below here on the weekly chart. So let's just wrap it up here. That's all the ones that I'm following right now. But if you have another country that or any individual stocks you want me to give an opinion on, again, just drop me a line. I'd be glad to do so. This has been Randy Finney with the right side of the chart. Hope you enjoyed it.